Hello class. I'm going to do my best here at screencasting for you chapter 7. This is a tough chapter to be teaching virtually. So if you haven't already gone through the PowerPoint, please do. Maybe even look over in your textbook, page 156, creating a worksheet. So at the end of a fiscal period, which is in this case the month, we are going to complete a worksheet. Excuse me. There are several parts to a worksheet, starting with the first two columns, which are called the trial balance. And the trial balance is the balance of every account that you have in your chart of accounts, and you get that from the ledger. So it's after you've done all your transactions for the month, and it's after you've posted them all to the ledger. You would then complete a trial balance. Now, as I've told you in the past, it's no different here, that this is all done electronically in most cases now. But for the purpose of learning about how this works, we have to do this work. And this chapter is a little time consuming with the work we have to do. So on page 158, we're going to do the work together. And a lot of it is done here, so you don't have to sit here and wait for me to type all this out. So the name of the business is Golden Tan. This is our worksheet. And again, the fiscal period on a trial balance, not a trial balance, a worksheet, I'm sorry, will say for the month ended. And in this case, it's February is the month that we're ending. Now, you'll see they list in the book for you all of the accounts that are included in your chart of accounts. This is a new account for you, income summary. And this kind of is highlighted here because it shows you a breaking point. The accounts that are above income summary, the accounts that are below income summary, and that's important to remember. So the first two columns are the trial balance columns. And you're going to list each of their balances. So if they have a debit balance, obviously you put it in the debit column. If they have a credit balance, you put it in the credit column. Now, that's all you needed to do for 7-1 work together, was to put all of the accounts in the trial balance. Now we move into what are called adjusting entries. And adjusting entries are defined. Adjustments are defined as changes recorded on a worksheet to update general ledger accounts at the end of a fiscal period. The only accounts that would get updated are accounts that change, like supplies. Because supplies, obviously, we use some supplies and we never credit the supplies account. When we take supplies, if we use up Post-it notes or we use up white paper or we use up toner, every time we use supplies, we don't credit the supplies account. So we almost have to, like we do an inventory of what supplies we've used for the month. The same with prepaid insurance. When we every day we don't say, oh, we used a day's worth of insurance, another day's worth of insurance. So what we do at the end of the month, we decrease our prepaid insurance asset account by the amount that it's worth. So every month there is a value of prepaid insurance. Now, if you look in the book on page 160, after 160, there's like these plastic pages in the book that are pretty cool to explain to you what you do on the worksheet. So you start with a worksheet, and you can see the worksheet for Encore Music, and then you flip the first plastic page, and it'll show you how the adjustments are recorded. Then you flip it again, and it'll show you how you record your income statement and balance sheet columns. And then the last sheet shows you how to do your totals, where you calculate your net income or your net loss. All right, so let's go, though, talk about and go over how to do the work together on page 164. So the instructions say use your worksheet. So we've got the same worksheet here. I still have it on the screen. And you're going to analyze the following adjustment information into debit and credit parts. It says record the adjustments on the worksheet. So the adjustment information is dated February 28th, which is the end of the month, and we have $325 worth of supplies on hand. Now, you can see that we started with $456 in our supplies. If we take $456 and we subtract $325, which is how much we have on hand, the difference is $130. So we're going to deduct the $131 from our supplies. To deduct, we do a credit. So credit of $131, and you can see our new balance that would be moved over here is the amount on hand of $325. Now we need to do the same thing for our prepaid insurance. It says the value of our prepaid insurance is now $500. So to get it from $750 to $500, we would have to credit it $250. So that's where your credits. Now you know for every debit there must be a credit. So if we've got 2 credits here, we need 2 debits. Well, the debit is going to go into an account called insurance expense. This is a new account for you. We have not used this up till now. So you're going to debit insurance expense and supplies expense. Again, it's a new account. These 2 accounts are only used for adjusting entries. So you've got 2 debits, 2 credits. They are equal. Remember, debits and credits are always equal. So you can see our first 2 columns are balanced. Our next 2 columns are balanced. So that's all you need to know then about 7.2 work together. Now moving into 7.3, this is where we're extending our information into the proper columns. Here's where this yellow line comes into play. This yellow line which breaks apart our balance sheet columns from our income statement columns. So everything above the yellow line goes on the balance sheet columns, and you just extend cash over. You just extend each of these accounts over. The only ones that change are supplies and prepaid insurance, and you're just extending all of these lines over. And this is everything you learned about in the first couple chapters in accounting, is your assets, your 2 liabilities, or your 1 liability, in this case just accounts payable, and your owner's equity, which is your capital and drawing. They make up your balance sheet columns. And this is, if I go in the book, this work together is on page 169. We're using the same document for all of them. So you've got your balance sheet debit and your balance sheet credit. You can see these do not balance, and we'll talk about that in a minute, but those still are your totals. Now, your income statement columns, you're going to extend. Your sales column is your only credit column, and then you have all these expenses. They're all debits. So you're going to calculate them, the totals for each of those. 1 credit, again, and all these debits for expenses. Again, these are not equal, and that's where we calculate either our net loss or our net income. Now, if you take the difference between these 2, you come up with $1530. If you take the difference between these 2, you come up with $1530. Now notice, this column is larger. So we would need to put that amount under this column in order to make these 2 equal. Same here. This one is higher, this one is lower, so I would need to add to this one to make it equal. My ultimate goal is to have these 2 equal each other and these 2 equal each other. And as long as the amount difference for each of them is the same, then you have done it properly. Now, if your totals here are on the outside, you've got a net profit for the month. This is how much they made. This was their income for the month. Now we know they made much more than that in sales, right? Their sales were high, but they have to pay out all their expenses. So this ultimately is what their profit is for the month. That net profit also ends up increasing their overall net worth here. So again, if the totals are on the outside, it comes up as a net profit. If these totals were on the inside here, that means expenses were more than the sales. That would make the number be here, and ultimately it would be here too. That would be considered a net loss for your business. And there are months, I'm sure, that businesses show a loss over a profit, especially during these crazy times through the pandemic. And that is as we're coming up on Black Friday. That's how Black Friday got its name. It's one theory how it got its name anyway. That's when the business went into the black. That's when they started being profitable for the year with the holiday season. Now, you can see on page 168 of the book, there's an example of a net loss. And the page 167, the page before it, is an example like we have here for Golden Tan, where they have a net profit. Now again, this is what the work together should look like for chapter 7. The on your owns are done right below it, and they give you a blank worksheet to start working on your own. Okay? Hopefully you won't have any trouble with the on your own or the application problem. Again, it's just a worksheet. You're going to do each of the columns. All the information is provided for you. Ladies and gentlemen, if you have any problems, please reach out to me. I would be happy to do a Zoom. I'm not sure. I won't be planning that next week, but going forward, if this closure lasts too long, I may think about how to move forward with class. So good luck. I hope this little screencast helped you get through this chapter. And I will see you and talk to you soon.